Hi everyone, back with another 5-minute stock analysis, this time on Spotify. For those of you who haven't heard of Spotify for whatever reason, Spotify is the leading audio streaming platform in the world. It's available in nearly 200 countries and it initially started with music. It's recently tried to take over the whole audio space essentially. So it works in a couple of ways. You have the freemium model where it's basically ad supported. You have free subscription, but you have to listen to adverts, so Spotify generates revenue through ad revenues basically. Or you have Spotify Premium, where you pay a subscription fee and you have a more pleasant experience, no adverts, things like that, and it gives a revenue share to creators. One possible bear case that won't be mentioned later on is that not all creators think this is completely fair. There has been problems in the past with the likes of Taylor Swift, for example, refusing to be on Spotify, but this is the way music is going, and it will eventually be an entirely digital platform, in my opinion. So it's kind of tough. This is definitely something to be aware of, that there could be some pressure on Spotify in the future for decrease or increasing the revenue share potentially. Spotify started with music streaming, and that is still the majority of its business. It recently got into podcasting, and by the end of the year should have around 3 million podcast titles, which will overtake Apple as the largest provider, and that's after starting the podcasting business in 2018, I think, which is quite incredible. Spotify recently announced the acquisition of an audiobook leader, Findaway. It's not Audible, but it is a large audiobook platform. It previously had a relationship with another Swedish company, but now it's bought Findaway in a recent deal. This only happened on the 11th of November, so a couple of days ago. And the terms of this transaction were not disclosed, so we don't know how much money this is, but I imagine it's not a tremendous amount. This is just another way Spotify is trying to basically monopolize audio and try to become a complete audio platform, much the way Netflix is in film and TV. Spotify wants to be that. The global audiobook market is predicted to be around $9 billion by 2026. So this is not that's a chunk of change. This is not insignificant for Spotify based on its current revenue. So this is definitely a strong move in my opinion. So Spotify released results recently. So having a quick look at right now, Spotify is a user growth and revenue growth story. It's not profitable, or occasional quarters it can be profitable. Right now, it's not. It's easily capable of switching to profits in the future, in my opinion. It has decent free cash flow, got decent gross margins between 25 and 28% this year. Easily capable of switching to this when it becomes a more mature company. But when monthly active users, premium subs, and ad supported are all growing at 19% year over year at this type of scale, that is fantastic. Nearly 400 million users. As you can see from the difference in revenue between premium and ad supported, the average revenue per user for premium users is much higher, as you would expect. But the rate of growth in the revenue of ad supported users is absolutely superb. It's 75% year over year, which is tremendous. And this is just another lever Spotify is pulling, is trying to monetize those freemium users more. And this is exactly what Spotify needs to be doing. This protects the price, the pricing, so they don't need to increase the price for premium users, because eventually that will happen, as we've seen with Netflix. Prices need to be increased over time as eventually Spotify's offering will become greater and greater, and the value proposition will become greater and greater for the users, so they won't mind paying, instead of paying $10 or whatever it is, they'll pay $12 instead, and this will have a material effect on Spotify's revenue. Looking into the future, Spotify launched in a staggering 86 markets earlier this year, and it's seen strong performance in South Korea, Bangladesh, and Pakistan, all large population centres, and it's growing really well in the rest of the world, but these are mostly freemium users, so it will need to grow its ad-supported revenue, increase the monetization as it goes. I'm not saying it's reached saturation in North America and Europe, because there are competitive products that it could take share away from if it continues to increase its value proposition with other audio products like Apple Music and Amazon Prime Music. But it's definitely going to need to expand in the rest of the world, and it's trying to do that, which I completely appreciate. But it needs to get some of those freemium users, even with increased monetization, it needs to get some of those freemium users over to premium, and that's going to be a key story for Spotify. and that is going to be the key growth story in my opinion. As we speak, Spotify's market cap is about 50 billion and it's trading at a price to sales around 5, which to me just seems ludicrously cheap for the soon-to-be leader in podcast, the leader in music streaming, and a new market entrant into audiobooks. This seems an incredibly low valuation. It's basically flat on the year, although it hasn't been flat at certain points. It's been very volatile. It's been up to 400 at one point, but it's slightly above its moving average now because it had relatively strong earnings recently. I think if Spotify continues to execute, I think this will look very cheap looking back at this price. I can see this being a much larger company in the next 2 to 5 years, and it's a stock that I'd be very happy to hold over the long term. Thanks, I'd appreciate it if you could like and subscribe.